think he kind of needs to pull a rabbit, and I think if I think there is a rabbit to maybe be seen at this point, is this shift toward this North American standard plug system that Tesla really pioneered. They own. It's in use in their supercharger network, which is now being embraced by other automakers, and they're going to all be switching to his plug standard. If Elon can keep building out that infrastructure, he could be, the one who does the subscription model where he's going to get all this money starting to roll in through people using his network as much or more than any other network to charge their vehicles. So while the product side, I think, doesn't look particularly bright in the near term, I think the longer term infrastructure play could be huge for him. And these moves recently to switch to his system, his plug, his supercharger network from all these other automakers, that could actually be much bigger and a much more important play in long term.
Investing in Tesla can offer substantial rewards for individuals who carefully evaluate the potential risks and rewards associated with the company. And this includes market position, financial performance, technological advancements, regulatory factors, and even environmental impact. You see, there's a lot going on in the Tesla ecosystem, all of which will bring about overall growth in the company in the long term. Real Tesla valuations are often based on the company's revenue growth, profitability, as well as its competitive positioning, and the numbers do not lie. In fact, anyone who's got an eye for profitable businesses can recognize Tesla as one of them, and that's not even an exaggeration. In this video, we're going to take a critical look at Tesla as a company, and we're going to take a look at how we can predict how much the company is going to grow in 10 years, and thus, by extension, how much Tesla stock will be worth by then. Note that these predictions are based on valid Tesla fundamentals and do not overestimate the automaker's capabilities. So, without any further delay, let's get on with it.
Last night in results was emblematic of a company that's investing to create long-term durable growth. And they're doing that in multiple ways, right? So first, they cut prices, which you referred to earlier in the year, and that's seeding the market with units. And with those units over time, they hope to basically penetrate FSD software that will create margin upside over time. They're also spending a lot in OpEx. They're doing that to beef up their AI infrastructure, to enhance that FSD offering, maybe even sell, they alluded to this yesterday on yesterday's call, to sell more FSD software to other OEMs.
So, George, I want to jump in. FSD is full self-driving. I just want to make sure the audience is on the same page with you.
Sorry, yeah, full self-driving software for its own vehicles and potentially to other OEMs. They're also investing in battery technology with 4680 cells. They're also investing in robotics, right? The Tesla bot could create long-term durable growth, for later on in the decade into the 2030s. So this is a company that, despite an erratic macroeconomic environment, is still putting the pedal to the metal and investing in projects that should create growth.
Over the past year, Tesla's stock price has experienced a huge surge, fueled by investor confidence and optimistic projections. Even more, stock analysis and forecasts paint a picture of a company poised with exponential growth. With Tesla's stock capturing headlines and attracting both retail and institutional investors, it's clear that the market sees immense potential in the company's growth and expansion strategies. Hey guys, welcome back to Tesla Tomorrow. A few years ago, there were concerns that Tesla would never be a profitable company, but this view has changed recently when the car company started making strong profits. This is a company that has a net income margin of 10%, which is expected to grow as it boosts its scale. Tesla turned its profit in 2020, and that was for the first time, when it made $862 million in net profit, with this figure rising to more than $5.5 billion in 2021 and over $11 billion in the past 4 straight quarters. Tesla still made a net income of $3.3 billion in Q1 of 2022, followed by $2.5 billion and $3.2 billion in the next 2 quarters. Some analysts often think that Tesla is an overvalued company, and for this reason, a lot of people may be expecting a pullback in Tesla's stock before they buy shares, a move which may not be very profitable in the long run. So based on fundamentals, where will Tesla be in 10 years from now? Let's find out. But before we do, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. A DCF valuation on Tesla shows that the stock is highly undervalued. Think about the automaker's market share, revenue, and unit growth, including its upcoming projects like Semi and Cybertruck. All of these indicate that something big is on the way for Tesla. To understand why Tesla stock continues to make profits for investors, let's start by analyzing its performance. Over the years, Tesla's stock price has witnessed staggering growth, outperforming market expectations and generating substantial returns. From breakthrough innovations and product launches to strategic partnerships and regulatory advancements, these factors have had a significant impact on Tesla's stock performance. Which is why analyzing Tesla's stock and identifying key trends and patterns can actually help investors make informed decisions on shares. There's also the part of understanding Tesla's valuation and how it compares to its peers. Tesla has not only dominated the market, but it's also helped other automakers in their efforts towards sustainability. By assisting other automakers in their electrification efforts, Tesla aims to bolster the entire electric vehicle industry. When more electric vehicles hit the road, it accelerates the development of charging infrastructure, increasing public awareness, and it also stimulates the demand for sustainable transportation. Ultimately, this benefits Tesla by expanding the overall market and solidifying the company's leadership position. So what is Tesla's outlook for the next decade? Well, the fact remains that in 10 years from now, cars will be used in a completely different way, and this will be made possible with Tesla's FSD. More people want cars that can drive themselves, and even more, cars that will serve as assets. And by this, we're referring to Tesla's robotaxi. Not only will these cars be autonomous, but they can also be added to the robotaxi fleet, which is why Tesla's expansion efforts are very crucial. The company already has plans to manufacture 20 million vehicles by 2030, and that's just 7 years from now, meaning that in the remaining 3 years, Tesla's still got enough time to make more cars. One of the pillars of Tesla's expansion plans lies in its production capacity. The company's network of gigafactories, strategically located around the globe, enable Tesla to scale up its manufacturing capabilities to meet the growing demand for automakers and electric vehicles. This production expansion not only allows Tesla to gain a larger market share, but also strengthens its competitive advantage by establishing a robust supply chain and streamlining operations. Now, this expansion is not just limited to its domestic market, as Tesla has set its sights on international markets, recognizing the global appetite for sustainable transportation solutions. By penetrating new regions and tailoring its product lineup to meet local preferences and regulations, the automaker aims to cement its position as a dominant player in the electric vehicle market. Investing in Tesla can be exciting, and it's great for individuals looking to grow their wealth in the ever-growing world of technology and sustainable energy. And when it comes to Tesla stock, it's essential to have a comprehensive outlook and consider multiple perspectives, as this can all provide valuable insight and different viewpoints to all help investors make informed decisions. Tesla's commitment to innovation is a significant driver of success. Therefore, it's important to assess the company's long-term growth potential by considering its expansion plans, international market penetration, and potential for new revenue streams. There are also strategic partnerships which Tesla makes, such as collaborations with energy companies or technology providers, all of which can impact its future prospects. While waiting for a stock pullback can be a strategic move, it's essential to maintain a long-term perspective. Tesla's stock has demonstrated remarkable growth over the years, and investors must consider the company's potential for future expansion, innovation, and market dominance. Where do you think Tesla will be a decade from now? Let us know down below. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.